Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you tonight. After contracting for 2 straight quarters, US GDP turns positive in Q3. Shares on Wall Street rise at opening bell as the economy grows at 2.6%, beating estimates. Elon Musk enters the Twitter headquarters carrying a sink as the $44 billion acquisition nears closure. Musk writes an open letter to advertisers saying he acquired Twitter because it's important for the future of civilization. He does not intend to use it to make more money. Credit Suisse shares nosedive after the embattled Swiss lender posts a $4 billion loss in the third quarter, also announces an overhaul and promises to cut its cost base by 15%. A new performance-linked incentive scheme for vaccine raw materials is on the card. Sources say the centre could soon allocate up to 6,000 crore rupees to boost domestic manufacturing. Incentives up to 40,000 crores could be announced for 8 new sectors. That's an exclusive. Facebook's parent company Meta loses $67 billion in market cap after missing estimates in Q3. Mark Zuckerberg defends the metaverse project, which led to a 20% rise in costs. The Monetary Policy Committee will hold an unscheduled meeting on the 3rd of November. This after the MPC failed to keep inflation below its 6% mandate for 9 months in a row. The committee will have to write a letter to the government explaining why it failed in its mandate. 13 months since the cabinet approval, the government is yet to decide on converting Vodafone Idea's dues to equity. All approvals are in place, and sources say a final decision from the Department of Telecommunication is awaited. The British Minister for Trade Policy says the next round of trade talks with India will begin shortly. Majority of chapters already closed, but UK also adds it will not sign a deal until it is fair and reciprocal. Gujarat lands a 22,000 crore rupee project to manufacture military transport aircraft. The joint venture between Airbus and Tata's is the first time a private company will manufacture military aircraft in India. India's women cricketers will be paid the same match fee as their male counterparts, says the BCCI. Women will now get 15 lakh rupees for every test match compared to 4 lakh rupees earlier, but no changes to the annual retainers where men get paid much more than women. Well, straight to the top story tonight. The U.S. economy is back in the green. After contracting for 2 straight quarters, the advance estimate for the third quarter GDP has shown a growth rate of 2.6% in the first quarter of this year. The U.S. economy contracted by 1.6%, and in the second quarter, it shrank by 0.6%. The 2.6% growth rate in the third quarter is better than most analyst estimates, who were pegging growth at 2.3%. All of this meant that shares on Wall Street jumped on opening bell. This is also good news for President Joe Biden and the Democrats, who are facing a midterm election in a few days from now. Here are economists and market watchers with what they make of the U.S. GDP data.
The most common cause of recessions is the Fed raises interest rates faster than the economy can handle. Where that would happen in the sectors, you already see that a little in this GDP. Business investment, housing, consumer durables, the stuff that's interest rate sensitive, that's the stuff that's going to suffer. And we haven't said anything about the dollar. With the dollar as strong as it's been, you're likely to see even more hit on manufacturing. But by no means are we out of the woods.
I would caution to say that this is an indication of sustainable upward momentum and more reflection of static support, particularly to the consumer. I don't think that we're seeing upward momentum in any of the components in the third quarter report. And in fact, also, as pointed out, durable goods, when we strip out those other components and look at the core of business investment, it's starting out the fourth quarter particularly weak. So I do think this was a welcomed reprieve relative to 6 months of negative growth at the start of the year, but this is hardly indicative of strength for the underlying economy.
The last 6 recessions, 4 times the economy grew 3.3% right before we went into the downturn. So there's no momentum in the economy. And importantly, if you look at the yield curve and we normalize it for the level of rates, we've never been more inverted. And the yield curve not only predicts recessions, causes recessions because of liquidity and credit that doesn't get created when that curve is so inverted. So we could avoid a recession, but very unlikely in my view.
Well, reactions coming into the U.S. GDP data. Reprieve at least for the third quarter, but analysts don't expect momentum to be sustainable at this point in time. Credit is getting costlier in Europe as well. The European Central Bank has hiked interest rates by 75 basis points, taking the lending rate to 2% amid spiraling inflation. However, depositors have reason to cheer as the savings rate will be raised to 1.5%. From the European Central Bank to a European bank that's battling a crisis, Swiss lender Credit Suisse has reported a worse-than-expected quarterly loss of $4 billion. Consolidated revenue came in at $3.8 billion. That's a decline of 30% compared to the same period last year. Under pressure from investors, the lender has unveiled a major overhaul of business, including cost cuts, reducing risk, and a revival of the investment bank First Boston. The bank's new CEO hopes that the plan is the start of a transformation into a new Credit Suisse. Jeff Cutmore joins us now with the details. Jeff.
We're going to see this significant cash-raising exercise, 4 billion Swiss francs. That's pretty much $4 billion these days. That will be raised both in a rights issue with existing shareholders, and then, as you point out, there is this qualified investor, the Saudi National Bank, that they hope will pony up 1.5 billion Swiss francs, but it has to go to an EGM, a meeting of shareholders for approval on November the 23rd. So we'll see how that plays. Elsewhere, significant cost reductions. They want to shave 15% off the cost base. Initially, that will mean cuts of about 2.5 billion Swiss francs and a major restructuring of the investment bank. The Apollo Group will pick up the securitized products business, and ultimately they reprise the First Boston name. Credit Suisse First Boston, or CS First Boston, will become a new standalone business, and they're hoping to attract third-party funding for that. M&A advisory and your usual investment banking products will be inside that unit. So let's just have a listen in to what Ulrich Körner, the CEO of the business, had to say about this restructuring of the operation in the US.
Number one, a radical restructuring of the investment bank. Number two, a significant reduction of costs. And number three, a further strengthening of our capital base. And I think with that, we have all the necessary ingredients, so to say, together to go where we want to go. Arguably, I would think at least one of the strongest growth regions over the next 10 years. We are in the region with our businesses like more than 60 years. And, we felt very much supported by, this new shareholder coming in and, believing and supporting our transformation going forward.
Well, that is Credit Suisse. Tough times there for the Swiss bank. Now, Elon Musk has treated Twitter users with visuals of himself entering the Twitter headquarters in San Francisco holding a sink. He also changed his profile bio to Chief Twit, indicating that he is the new boss, and this has happened a day ahead of the court-ordered deadline to close his $44 billion deal for the microblogging site by the 28th of October. Now, remember, Musk recently asked his co-investors to prepare for financing the takeover. Twitter's shares will be suspended from trading on Friday. Now, Musk has just released a letter addressed to Twitter shareholders from his handle. Elon Musk has said that the reason he decided to acquire Twitter was because he believes it's important to the future of civilization to have a common digital town square where a range of beliefs can be debated in a healthy manner without resorting to violence. Musk further said that he did not acquire Twitter to make more money, but to try and help humanity. So that is Elon Musk preparing to finally close the deal. This has been a long saga with many twists and turns, but it looks like it is finally a done deal. Global earnings, tech giant Meta reporting lower than expected numbers this quarter, missing street estimates on almost all fronts. The company's revenues came in at just under $28 billion, slightly below street expectations, down 4% year on year. This is the second straight time that Meta reported a dip in its revenues, and the company's forecast for the next quarter shows another drop. This did not sit well with Wall Street investors. The company's shares plunging nearly 20% in yesterday's trade, wiping out almost $67 billion of the company's market cap. Samsung Electronics reporting a 31% decline in profit in Q3 on the back of a big slump in demand for smartphones and semiconductors. The company's chip business, which is responsible for a majority of its revenue, saw a 50% drop in profit. Samsung, however, said that they would not reduce chip production. The company says they expect demand to recover in late 2023. Back home, the Lal Street recorded the biggest gain in the last 3 series while closing a volatile trading day with minor gains. The Sensex rose higher by 200 points. The Nifty gained over 80 points. Bank and mid-caps also ended the day in the green. The October F&O series is also drawn to a close. The Sensex and the Nifty gaining 6% each as bulls regained some lost ground. The Nifty is now 2% away from record highs. The Monetary Policy Committee will hold an unscheduled meeting on the 3rd of November. This is not for rates. This after the MPC failed to keep inflation below its 6% mandate for 9 months in a row. The committee will have to write a letter to the government explaining why it failed in its mandate. Lata joins us now with more. Lata, we have, of course, been alerting our viewers about this possibility, and now there is a date to that event.
The special meeting called of the Monetary Policy Committee on November 3 seems to be because the Monetary Policy Committee failed to keep inflation under 6% for 3 quarters in a row. It does appear that the meeting will only discuss what response the committee, that is the Reserve Bank, should file to the Government of India. Why we get this is because the announcement from the RBI today clearly says that this meeting has been called under Section 45ZN of the RBI Act. Now, 45ZN of the RBI Act clearly says when the bank fails to meet inflation target, it shall set out in a report to central government, 1, the reasons for the failure to achieve the inflation target, remedial actions proposed to be taken by the bank, and an estimate of the time period within which inflation target will be achieved by implementing the remedial actions. So, considering that today's announcement clearly says Section ZN, the meeting should only discuss what will be the response to the government. There are some people in the market who fear whether the November 3rd meeting will also take some policy action. To me, it looks less likely. It looks like it will only discuss the contents of this letter to government. An additional point, the governor has already made it clear, this letter to government is privileged. RBI will not release it in the public domain. It could be released by the government, we do not know. So at the moment, it's only a guess what the contents of that letter could be, whether, it will indicate whether the government will reply back, what it will reply. All those are still, a grey area. We will have to see how it pans out.
Lata, many thanks for joining us. On to a CNBC-TV18 exclusive. The government could announce PLI schemes for 8 more sectors. Sources say the centre is considering allocating up to 40,000 crore rupees. A new scheme to boost the manufacturing of raw materials for drugs and vaccines is also on the table. Pariksha joins us now with more. Pariksha, this is round 2 for the pharma sector, and a few other sectors possibly likely to get included under the PLI schemes.
Well, the government has been strongly considering ways to reduce reliance on import of vaccine raw materials. So the next PLI scheme for the pharma sector will actually focus on just that, how to encourage manufacturing of vaccine raw materials in India and also incentivize import substitution. So we're getting to know from our sources that there could be a new PLI scheme for vaccine raw materials to the tune of 5,000 to 6,000 crores. And the focus would be to reduce reliance on imports from US and China. This will cover all vaccines, including COVID vaccines manufactured in India. Industry sources tell us that the government has sent a circular to every pharma company in India asking them about their level of imports when it comes to vaccine raw materials and to what extent can they do import substitution. So the government has received those inputs. There are at least 350 raw materials used in manufacturing of vaccines, and we've been told by industries that 70% of our vaccine raw materials is imported from US and China. So there is an important need to bring this down as soon as possible. Stakeholder consultations are going to take place very soon between the pharma ministry and also different vaccine manufacturers in the country. So we are going to see the final contours of this very, very soon. And apart from vaccines, we are likely to see PLIs for the toy sector, leather goods, apparel, shipping containers, coal gasification, specialty steel, specialty chemicals. all these PLIs are on the table, are being considered by the government.
Parikshit, many thanks for joining us with that CNBC-TV18 exclusive. Let's take a look at the other headlines we're tracking this evening. The British Minister for Trade Policy says the next round of trade talks with India will begin shortly. Majority of chapters already closed, but UK also adds it will not sign a deal until it is fair and reciprocal. A boost to the Make in India mission. Airbus, one of the world's largest aircraft manufacturers, is partnering with India's Tata Group to make the C-295 transport aircraft for the Indian military. The aircraft will be produced in the Vadodara district of Gujarat. Prime Minister Modi is expected to lay the foundation stone of the manufacturing facility on the 30th of October. Important to note here, this is not a new deal. India had signed a 21,000 crore rupee deal with Airbus in September last year to procure 56 295 transport aircraft. Airbus will deliver the first 16 aircraft in flyaway condition from its final assembly line in Spain within 4 years. The subsequent 40 aircraft will be manufactured and assembled by Tata Advanced Systems in India. It was another bad day for Akasa Air's Delhi-bound flight that took off from Ahmedabad suffered radome damage after being hit by a bird. While all passengers were safely deboarded, the Boeing 737 MAX 8 aircraft has been grounded for inspection and repair. This is the fourth incident concerning Akasa Air's aircraft in the last 2 months. The airline has 6 operational planes in total, and grounding of one aircraft in the peak season is likely to impact its business. ArcelorMittal has entered into a funding agreement with BHP, Mitsubishi Heavy Industries Engineering and Mitsubishi Development to test a new carbon capture technology to reduce carbon emissions during making steel. The two-phase trial will take place at 2 steel plants of ArcelorMittal in Belgium and North America. ArcelorMittal is aiming to reduce carbon emissions by 20% by 2030 worldwide. EdTech giant Byju's raises an unsecured loan of 300 crore rupees from its wholly owned subsidiary Akash Educational Services. The loan is claimed to be for principal business activities. This comes at a time when the world's most valued EdTech firm is aggressively cutting costs in the midst of a drawn-out funding winter for the sector. 13 months since the cabinet approval, the government is yet to decide on converting Vodafone Idea's dues to equity. Ashmit Kumar joins us now with the latest. Ashmit, all the regulatory approvals have come in. What's the hold-up?
Well, that's a question that we have been, in fact, asking the government officials for a fair bit now. But as you pointed out, it's been 13 months since the cabinet granted the nod, but the clock is still not moved forward here. Keep in mind that in September of 2021 is when the cabinet, amongst a whole host of telecom relief measures, had also allowed for these telecom government dues to be converted into government equity. Since then, in January, Vodafone had applied, but the wait continues. What's important at this stage to understand is that all necessary approvals have been secured. So whether it's SEBI, looking in compliance with the takeover regulations, SEBI has granted its nod. The Finance Ministry has given its approval. So the file, as we understand, the application as we understand, is currently resting before the DOT pending consideration. DOT is finalizing a call. Having said that, there are a few aspects to keep in mind. Number one, outstanding dues of Vodafone are piling up. Whether that's tower companies, whether that's vendors, that is a big sore point as far as Vodafone Idea is concerned. Also keep in mind that Vodafone Idea had sought to issue the shares at a par price of 10 rupees per share. However, it's been trading below that price since the month of April. So that has also been another point of concern. And of course, let's not forget, in terms of investors and in terms of money being brought in by the promoters, that's another core concern that perhaps has been doing the rounds. But so far, no clarity coming in from the government on what a roadmap will look like for converting these dues. It's been 13 months since then. No clarity on the way forward.
Ashmit, many thanks. So the wait continues. No clarity yet on the conversion. Time for us to head into a break, but up next, the BCCI announces equal match fee for men and the women's cricket team. Stay tuned to know what the Indian women's cricket team captain Harmanpreet Kaur has to say when we return. Shares of Dabur rallied over 3% after the FMCG major acquired a 51% stake in the 64-year-old iconic brand Badshah Masala for nearly 600 crores. Manglam is here with the contours of the deal, but more importantly, the opportunity that the spices market is throwing up.
The Indian spice market is heating up, and the latest entrant in that is Dabur, with a 51% stake purchase of Badshah Masala for about 587 crores, valuing the company a little over 1100 crores. So what does that mean? By their own estimates, it is a 4.5 times FY23 price to sales and 20 times EV to EBITDA. So what does this mean? That Badshah's FY23 revenues are likely to be around 256 crores with margins of 23%, EBITDA of just shy of that 60 crore mark. However, the data point that stood out for me the most was that 82% of their revenues come in from blended spices sales. What are blended spices? Blended spices are basically not regular spices, but pav bhaji masala, kitchen king masala, chaat masala, so to say. It's marked their foray into a 25,000 spice category, which at 2020 was 24,000 crores, and by 2025 is estimated to be 50,000 crores. Why is that? Well, because currently only 24% of the market is organized branded. By 2025, this is likely to be 50%. And in that, the fastest growing segment will be that of blended spices. Currently, blended spices account for just 24% of the sales. Going forward, this is likely to be 65%. Why is blended spices the key growth driver? Well, because blended spices have 3 to 3.5 times higher realizations. I mean, you can take 5 different masalas and sell it separately, or you blend it as a pav bhaji masala and sell it for 3 to 3.5 times the price. And that means the gross margins jump from 33-35% all the way up to 50-odd%. What are the other drivers in the spice market? The biggest driver is the number of deals that have taken place. In November 2019, we had Investcorp investing almost 80 crores in Intergrow brands. Then May 2020, we had some other, big announcements as well. ITC entering the 2150 crore deal with Sunrise Foods. June 2020 and September 2020, we had big investments. A91 investing 125 crores in Push. And as of September, we had Okla and MTR buying Eastern Condiments for about 2,000 crores. In the listed space, we've heard, Tata consumers selling spices under the Tata Sampann brand, and Nestle as well, selling their Magic Masala under Masala-e-Magic, those brands. So it is a market which is growing fast. What are the key drivers for the growth? Higher share of organized market, higher gross margins, and increased experimenting in kitchens, which actually started during the COVID times itself. And also people need convenience, so they're ready to, spend in masalas as against making them themselves, and higher brand stickiness. If you like a certain masala, you're likely to stick to it through your lifetime. But what are the problems for this market going forward? Regional local companies are the ones which dominate, because you want a certain taste coming in from a certain brand itself. So high stickiness can be a boon or a bane. Different cuisine and taste palettes in India are not one big company can succeed here, which is why we've seen a lot of regional players, and there has been a lack of success by MNCs in the past who've looked at this spice market. The question is, can Dabur spice things up here?
Yes, it certainly looks like it will. Thanks very much, Mangalam, for joining us. Now, Indian women cricketers will be paid the same match fee as their male counterparts for international matches across formats. Today, the BCCI announced that a woman cricketer would get a match fee of 15 lakhs for a test match, 6 lakhs for a one-day international, and 3 lakh rupees for an international T20 match. That is a significant increase compared to the match fees that they were paid earlier. You can see the difference there on your screens. However, a match fee is only a very small component of a cricketer's take-home per year. No changes have been made to the annual retainers, where men get paid much more than women. I spoke with Harmanpreet Kaur, the captain of the Indian women's cricket team, and Diana Idulji, former Indian captain. They welcome the match fee parity. Here's a slice of that conversation.
Well, I was very happy. I totally welcome this news, because, this is very important for all of us, because, we have been talking about, women equality and a match, match fees and everything, when we'll get equal amount of the way, men's are getting. And today, that news has come, and we all are very happy, very excited to know that. And I'm sure in future also, lot of things are coming on our way, and I'm really looking forward to that.
I want to get your reaction to the decision that's been taken today, the impact and the implications that this is going to have.
Thanks for having me on your show. I'd just like to say that this is a very, very big step, one of the few steps to be taken, and it is a great Diwali gift for the women cricketers who have been performing well in the last 5-6 years. I wouldn't say that this is the first step, because when I was a member of the COA in 2017 to 2019, it started with that, the movement started with that, when we brought the one-time benefit and pension for women cricketers. pension was there for players who were playing more than 10 test matches. But I saw to it that 1 to 10 also got the pension, and the one-time benefit was for all. Then slowly we started giving the same type of travel facilities to the women cricketers. They started traveling business class. They got the 5-star hotels. They got the same daily allowances. So these are small, small steps being taken. You know, it's a construction of a building. And today a major block has been put that the match fee has been increased. And the last icing, I would say, on the cake would be the contract system, but we should wait. And I agree that we need to market the women game a little more better. And with the women IPL tender, broadcasting tender to be coming up, the franchisees coming forward to bid for teams, all that is moving in the right direction. You know, BCCI is taking small steps, but surely they are taking the positive steps to improve and promote the game of women's cricket.
With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18.